Ladies and gentlemen, our guest for tonight is Mr. Kenneth Igiri. Kenneth, you are welcome. The floor is now yours. Thank you.
Thank you very much, Fred. Thank you very much, Barbara. And thank you everyone for joining the call. So I'll just go ahead and share my screen and we start the presentation. Thank you for this glorious introduction, but I'm a colleague like you, and I would like to share a few thoughts on this subject. And I hope you can hear me clearly and see me clearly while I quickly go ahead.
We can.
Great. So today we're talking about the outlook of digital financial services in Ghana. And I'll start, this introduction has already been done. I'll start with this slide, which is basically an overview of what we mean when we say financial services. From banking services to investment services, insurance, payments and remittances. Typically, when people say financial services and put the word digital to it, most of the time we're talking about payments, because the e-commerce platforms have given us a reason to pay online with all sorts of means, which I shall talk about very shortly. In the banking sector, definitely you will know that we have the savings, current and savings accounts, fund transfer, loans. In the investment sectors, you know about the stocks and bonds, mutual funds, and so on and so forth, as we see on the slides. These services are services that have been around for probably over 100 years in the banking sector, in the financial sector. And now in recent years, within the last 2 or 3 decades, we're now aggressively digitalizing or digitizing these processes, bringing them into the technology or computing space. And typically we have people who we may want to call techpreneurs, technology entrepreneurs, who are making these transitions happen. They are making these transitions happen either in the context of a fintech, which is a small company or startup which is focused on financial services in the technology space, or within big organizations like banks, which are transforming their operations into the digital space. There are a few questions they will typically ask themselves when we want to transit this well-known financial services into the digital space. We want to ask, how do we collect the money? How do we do transfers? How do we secure the money? How do we calculate interest? How do we simplify the process so that the value of being able to do it on my phone or on a web browser on my laptop is realized? How do we satisfy a regulator? That last question is probably the most difficult question that fintechs have to answer in this day and age, because the moment you start translating services in the financial sector to something that can be done without walking into a bank, you're opening yourself up to possible security issues. So technologists have to answer these questions in their attempt to digitalize or digitize business processes. Typically, if you walk into a bank, you have to meet with a teller, interact with a teller, ask questions, and get your service done. If you walk into a bank and say, I want a bank account, that bank account is seated on a centralized system, and you have to access it by maybe with an instrument like a check or a withdrawal form, or these days now online, or an ATM and so forth. Now, the replacements that are happening are from teller to some software interface, from a bank account to maybe a wallet on your mobile phone, or a wallet that is backed by a bank account, from a long time of settlement, 3 days transfer period, to instant transfers, to real time. From that door of the banking hall, from that vault, from that security guard that you need at the gate, to cryptography or to encryption, and to all sorts of cybersecurity paraphernalia that we have to put in place to make sure that the online transactions are secure, or even more secure than the offline transactions. So these questions have been answered by the typical technology entrepreneur who needs to translate regular financial services to digital. All right, in the context of Ghana, these financial services, we can break them down in many ways, but this is one way we can break them down into those who are delivering these services and how they are delivering the services, the mediums they are using, and what they are offering. We're talking about telco telcos are now essentially, I think somebody needs to mute. Okay. Telcos are essentially entering into the space. The traditional banks are in this space. Those who offer other kinds of financial services are in this space. And even the fintechs, probably the newest entrants to this space, to this financial service space, are the fintechs. And probably they are potentially the most powerful. So these people, these various players in the industry are offering us mobile telephony, financial services or mobile telephony. They're offering us ability to take deposits, to give loans, insurance, securities, and all this whole spread. And on mobile telephony, you can talk about database services or non-database services like USSD. If we're taking deposits, there are those who are taking deposits in terms of savings, credits, products, and so on and so forth, as you see. So it's a whole flock of services that are possible in the financial services space. And the point is that this whole space, there are offline components of offline capabilities that we are aware of, and they are actually being translated into the digital space. Right. So what are the use cases? What are the benefits of doing this translation? What are the use cases? What are the benefits of doing this translation? Use cases. I've talked about payments in terms of paying for e-commerce services or products. Bill payments. Right now, you can do your water bill, your power bill, and all sorts of bills on your phone, on the web, using a USSD code, and so forth. Talking about remittances, sending money to other countries through products like EcoBank's Rapid Transfer or Ripple, that is based on blockchain, or other platforms that allow you to do that. Fund transfers within country, from bank to bank. And the Ghanaian government has done a great job of interoperability that allows you to essentially send money from one bank to another, one bank to a telco, one fintech to a telco, and so forth. Savings, there are personal finance management solutions that allow you to simply keep dumping your money there until the day you need it. And of course, investments like the Dalex Swift, which has done an amazing job of reaching the grassroots, with their Swift products, SaveWise Investments. Swift, I can't remember the meaning of the name now. Benefits, why should I adopt digital in order to deliver these financial services? One of the key reasons is instant settlement. If I do the transaction now, I am going to get value now. Convenience, I can do the transaction from wherever I am, from my bedroom, from my washroom, if you like, 24/7 operations. It doesn't matter what time it is. I can do what I want to do. Self-service. I don't need to bear with anybody's good or bad days, good or bad moods. I don't need to ask too many questions. As long as I can navigate the platform, mobile or online or on the web, I can do my transactions. Then automation. I can schedule my transfers. I can schedule my airtime purchases. I can schedule my data purchases. And transparency. Every time I do a transaction, I get an SMS, I get an in-app notification, or I get an email telling me what I've done, and I can refer to it if I need to do that. So there are so many benefits of translating from the typical traditional financial service that we know offline to the online or digital space. Now, what has Ghana done so far? I believe that Ghana has an amazing advantage, because from way back in 2008, Ghana was the first country to invoke an Electronic Transactions Act that basically allows people to operate in this digital space in the finance sector. And they have done a number of these kinds of policies and drives, like the Payment Systems and Service Act in May 2019, and even the QR that came in, I believe that was 2020 or 2021. And so many drives, and including even the interoperability that we've talked about that the Vice President championed. The ability to expose things like ECG to allow digital payments and the use of mobile app to make your payments and check your status of your power consumption. So the government is really a forward-thinking government in that sense. And many fintechs in Ghana have taken advantage of this opportunity. And you see the whole map there showing some of these innovative fintechs that are taking the industry by storm, and a lot of them play in the payments space. One of the prominent ones we all probably know is Express Pay. And I'll talk about some of the things they've done recently to make it a platform that is so popular. So Ghana is one of the fastest growing fintech ecosystems in Africa, and Fintech News said that. We have also seen how Ghana, I believe Ghana is second place when it comes to Kenya in the mobile money space. Ghana's fintech sector, financial services sector, digital financial services sector is dominated by mobile money. Mobile money has done a lot for this country in terms of the ease of payments, the rise of fintechs, the agents that have gotten things to do, and so forth. There are other players in the African space, but Ghana definitely has its place in the financial services sector. What is responsible for these kinds of successes, both in Ghana and the rest of Africa? I see mobile penetration as a dominant force because, as you can see on the map on the right, in sub-Saharan Africa, we have a penetration of about 46% in Africa. Yes, that is the penetration in terms of mobile technologies, and we see that Ghana is a strong player there. We also see that in the lower maps on the right, let me just use my laser to do that. In the lower map on the right here, we see that the density of Ghana's mobile penetration is mostly in the big cities. So there's still a lot of opportunity for adoption, for penetration of mobile, and consequently of digital financial services. So on the left, we see the mobile money penetration. On the right, we also see the bank account penetration. You see, the problem that the likes of M-Pesa and mobile money generally solve is the problem of financial exclusion. So a lot of people in many African countries, particularly the rural areas, do not have access to formal financial services. And the moment you put it on a phone or USSD and simplify the process, you begin to increase the volume of people who have access to any kind of financial service. And we see that happening with mobile money, and mobile penetration is enabling that. I've talked a little about financial exclusion, and then juvenile population. Africa is the world's youngest continent. Young people are more inclined to accept new technologies. Young people are more inclined to try new things. The older people, they want to stick with what they know. So that gives an advantage in terms of the adoption of digital technologies, or the penetration of digital technologies as we go along. So there's hope for our future. And then I mentioned earlier regulatory support. Once a government decides that we want to do this and they provide the platform to do it, fintechs will rise, banks will adopt, people will integrate to allow interoperability. More on this penetration, we see some more figures. 140%, that is Ghana's mobile penetration, 53%, that is Ghana's internet penetration. And we also see that Ghana is one of the first few countries that has adopted something called Open RAN, which essentially makes it easier for telco infrastructures to talk to each other easily. Okay, so mobile is a strong factor. People say there are those that say that mobile, the future of everything is mobile. So mobile is a strong factor in the penetration of fintech. Now, there are some factors, despite this penetration, despite these opportunities, there are some factors that are impinging on massive growth that we will have expected. And some of those are low adoption rates for internet and security. And I've broken it down a bit to the aspect of trust. Do I believe as a consumer that when I send my money, it will reach the destination? A lot of us these days, they still have to call someone and say, oh, I sent you 200 CDs. Have you got it? You know, ideally, a fully trusted system, it's almost like I've given you cash. I don't ask you, have you received it? Then there's also aspect of customer intimacy. How much do you engage the customer as a telco, as a bank, as a fintech to make sure that you are getting the right feedback about their use of your services? That goes a long way to increase adoption. And then culture. Typically in our part of the world, people like to talk with people. And if you're giving me a technology that will isolate me further,
turn right onto R14.
I have questions about that kind of technology. Poor internet, cost of data, low penetration of internet, security, impersonation, hacks. You know, anytime there's a hack in a bank or in a mobile system or cards, people are very wary of using those systems anymore. So let me delve a little bit into the issue of adoption. Adoption is a human behavior matter. And some of the inhibitors are literacy, poverty rates, and complexity. if I'm not so educated, you have to create a system or a solution for me that I can easily use without having to know how to type numbers or read English. Somebody has proposed that, can you give me a mobile app where I flip through to count notes rather than having to type notes? That is one idea. Poverty rates, can people buy smartphones? And these days, solutions to that is USSD, which doesn't require data. But the downside of USSD is the fact that what you're really doing is session-based SMS. So you need to complete the transaction within a limited time, and typically we have a lot of timeouts in those cases. But poverty is a factor that limits how people can purchase their smartphones and so forth. Complexity, if my mobile app is too complex, if my internet platform is complicated, it tends to limit the extent to which people use it. A lot of people who use mobile apps these days, they can't even use maybe 20%, 30% of the features of that app. People just want to send their money, check their balance, pay their bills. I mean, when you start becoming complicated with all the features, it may be a problem. So in some other forum, we suggested the aspect of modularizing a mobile app, so that if I want 3 modules that do payments, remittance, and balance check, I just download those 3. If I want more, I choose to download others and so forth. So there are some enablers. Reliability. Does this app do what it says? And that is one of the wins of platforms like ExpressPay. Every time you use it, it gets the job done. And there are others like that, of course, but from experience, you see that people want an app that works. It doesn't even matter if it's fine or not fine at this stage. Fine or not fine, user interface, user experience, user UX is an add-on. What reliability? Does it work? And then customer experience. Can I have somebody to talk to? Or rather, customer experience in terms of how does it feel using the platform, and customer service in terms of, do I have somebody I can complain to if I do have problems? So those are enablers that have helped those who have succeeded succeed. The role of banks. Banks more and more are becoming platforms which allow their backends to be the useful endpoints for fintechs to integrate with in order to deploy amazing solutions. So they expose this backend API so people can do digital lending, people can do process payments and store value within their backend. So banks are more and more becoming that, because fintechs are much faster than banks in deploying new solutions. I just need to run through more quickly. So over the years, these financial services have evolved from internet to cars, mobile to AI, contactless, and we don't know what is next. Crypto is now becoming popular. The metaverse and all those, the purchase of NFTs are also evolving, and we're seeing new things beginning to happen. There are some, I just make a touch to it, this flow. You see how the flow happened from internet gave birth to e-commerce, and then cards came. I can buy with my card, I can withdraw cash. These days you have deposit ATMs where I can pay in cash. And so banks are becoming more and more asking themselves, do I need to build a branch? If an ATM can work for me, if my mobile can work for me, if my online can work for me. Mobile came along with apps and USSD and all sorts of features. AI came along and made possible digital lending. If I want to borrow small amounts of money and I need to do it, my bank needs to build credit score, there's data and AI to do that. Digital assistants like Siri, who you can tell, please make a purchase for me, make airtime purchase, and it's done. Buy this music for me and it's done. Populate my fridge and it's done, and so forth. Then QR codes, which is another leap forward, and so forth. All right, so let me stop by sharing with you these predictions by Brett King. These predictions are predictions on the global scale, and it says by 2025, the largest deposit-taking institutions will be technology players. By 2025, 3 billion unbanked people will enter the financial services sector in the digital space, actually, without going to a branch. By 2025, more people will transact on computer, smartphone, voice, augmented reality than those who visit branches annually. That's a big jump. By 2025, more money will be dispensed via artificial intelligence algorithms, that's in terms of loans, than the entire network of financial advisors today. By 2030, 12 countries around the world would have been mostly cashless. And by 2030, AI would have accounted for the loss of more than 30% of today's jobs. So what does this mean for us? This definitely means opportunities for those who are entrepreneurs. This means probably new skill sets required for those who are working. This probably means new business models for those who have to make those kinds of decisions. And we see some technologies that are playing in this space in terms of blockchain, IoT, cryptocurrency, and of course, AI in terms of digital lending. So that's where I stop for now. Thank you very much for hearing me out.
Thank you, Kenneth, for the great delivery. We are very, very grateful.
You're welcome, sir.
Please, it's now time for questions and answers, recommendations, and if there are any other comments you can come up with. You can either raise your hand up and you'll be asked to talk, or you put your question in the chat box. Thank you. So I see one hand up. Baba, please, you can go ahead.
Okay. Hello, good evening. Kenneth, I really enjoyed your presentations. Very pictorial. I think I also like particularly the predictions that are coming up. I just want to find out that, is it just technology that's giving fintech and technology players this leverage? Or there is something about their attitude, their culture, that sort of fuels this performance? Beyond technology, what is it about them that is giving them this leverage that banks, even though they have the financial muscle and experience, are unable to catch up? Thank you.
Okay, I'll say three things to that. The first thing is fintechs are nimble, banks are not, or bigger players are not. Fintechs are nimble because they can change easily. If there's a complaint, they can easily adjust to satisfy the customer. And once you begin to be responsive to the customer, you are likely to win their heart and you're likely to go faster. The second thing is that financial exclusion, which I mentioned. Now, the story of M-Pesa was that people were looking for ways to send money to their relatives in the villages. And banks did not have the impetus to build branches so close to the village because it's not profitable. So a fintech that can deliver those capabilities on a phone stands a chance of meeting that need, the need that has arisen by financial exclusion. The third thing I may want to state is generally the fact that big organizations can be how do I say it? Maybe proud, maybe overconfident about their position, and that's what happened with Kodak, which fell to phones essentially. When they are full of themselves in quote like that, when there's a big distance between the person who is driving the vision and the customer, so you get to meet unpleasant customer experience guys and so on and so forth. That doesn't happen with fintechs. Fintechs have to be aggressive to survive. So they like to please you as much as possible. So these are some of the factors that help to make fintechs the fastest growing thing right now in that space. I think that's what I have to say for now. Thanks.
Thank you, Kenneth. Yeah, Godfred, you can go ahead, please. Godfred.
Godfred has a question in the chat.
Yeah.
Hello, good evening. Where
okay,
does
so
place itself in the new shift of growth in the financial space? Is that a question?
Yeah, okay. I think that is a question.
Okay, let me ask.
Where does crypto place itself in the new shift of growth in the financial space?
Exactly. Now, obviously, maybe this is a short time to talk about what crypto is, but essentially just think of it as money that is based on mathematical computations and money that is based on peer-to-peer relationships, money that is not centralized, doesn't require a bank, just requires consensus, all of us to agree that this is what money is. Once we all agree that it's money, it is money. And it's based on that. And money, cryptocurrency is based on blockchain. Blockchain is basically a system that allows you to record transactions of any type, both financial and non-financial, that in a contiguous chain that in which all the transactions are linked to each other. They are secure by cryptography, and we can trace and have visibility over the entire blockchain and create at any time we want. Now, what crypto is doing now is that crypto is basically the financial side or the payment side of that blockchain technology. So what people are now able to transact using cryptocurrency. There are a few nations in Europe that accept payment in Bitcoin, and other cryptos are rising. It is possible that cryptocurrency generally, over 300 of them, not just Bitcoin, cryptocurrency might become a form of payment generally accepted. Some nations are accepting it. But you see, it's going to be difficult to displace the traditional institutions like banks. It's going to be difficult to displace those who are holding the ground in terms of regulators. Is a very serious change. So that is why the central banks are responding by creating their own regulated cryptos, regulated blockchains. They call them private blockchains that they control. So they want to retain that control. So nobody is actually sure whether crypto will become a valid form of payment in a ubiquitous manner. Those that are even predicting that are saying that it may not be Bitcoin because Bitcoin is based a lot on speculation. So if a currency does, currencies don't fit that description. So generally, we might see cryptocurrencies, coming up as forms of payment, maybe in parallel with fiat or in parallel with other forms of digital, as most countries go cashless, but nobody really knows how soon that might be. I hope that helps.
Yeah, Barbara.
Okay, so there's a question here.
Okay, so let's take Emmanuel, then we can come back and take the question in the chat box. Yeah, Emmanuel, your hand is up. Can we hear you?
Yeah, okay. Good evening to you all. Thank you very much, Kenneth, for the presentation. I think it's quite elaborative and very informative. My question is that I'm happy that in your presentation you mentioned fintech companies like ExpressPay, but then I am also a user of ExpressPay, and then I noticed something. The time that it started, it was users are able to save to, let's say, upload money on ExpressPay card or wallet. But along the line, that stopped. I believe it stopped because of Bank of Ghana regulations to this fintech, that they are not licensed to hold up cash. They only serve as a mediator between a person's Momo account and then either bank account or a third party. So currently what they do is that all the monies that were on Express card, you can only withdraw, you can add on. So to me, as a user, it created some insecurity for me, because at a point I thought, hey, what is happening? All right. So my question is that the regulations by the central bank for this example that I gave, is it limiting fintech companies, or it is encouraging, or on the other hand, is it encouraging more people or to join into this digital financial transaction, or it encourages financial inclusion? Thank you very much.
Okay. My view about regulations generally is that the regulator always acts like an umpire. So they have to think about the balance of things across board. Now, if there's a way in which you let fintechs go do everything they want, then people start losing bank jobs because banks no longer profitable. There's also a way in which you let telcos take over, and that balance is not there. So regulators have to try to create the balance. And whenever you have regulation, just like you have security, there's some level of inconvenience. So, and it's the same story with blockchain and Bitcoin and cryptocurrency. It's the same story with even mobile money in countries like Nigeria. Mobile money discussions started in Nigeria. I was in Airtel, and back 2007, and a lot of banks fought against it. So you see, the stakeholders have to reach some kind of consensus, and the regulators, the government, everybody has interests. So they now have to try to create a balance. So to the fintech, it might be limiting, but to the bank, it might be liberating. So I think it's just a matter of creating a balance among all the players in the industry.
Okay, thank you, Kenneth. We would encourage that people on the platform can also bring their views and their opinions about the questions being asked. But we can also move to the next question in the chat box. Fred, can you please help us? There are 2 hands up. Godfred, your hand is still up. Nana Femba. Nana, please unmute to speak.
Okay, so Ben want to know the distinction between the payment and transfers. As he has noticed that in terms of it's being used interchangeably among players.
Okay, in my opinion, the definition of the payment is that you are paying for a service. You are paying for a service or a good, maybe e-commerce payment or bill payment. Yes. But when you say transfer, so when you say transfer, you are talking about sending money to someone, not necessarily because he has offered a good or a service, but because maybe it's a remittance to somebody who needs the money or whatever. So it's typically with a payment, you are paying a merchant, right? You are paying someone who is selling something. With a transfer, you are using the platform to move money from one wallet to another, from one bank account to another, or otherwise. That's the way I see it.
Okay, let's see the others too.
Okay. So we have also, how can banks work to effectively join this new group or change? Godfred asked that. And I mentioned earlier that banks are now becoming some kind of a back end. That's why I think it's in the UK where you have something called open banking, which essentially means that a bank creates the platform, a bank has the data. Someone says that banks have probably the biggest amount of data next to government in terms of history of transactions, customer details, and all that. So the UK government made a regulation that let's expose this API, this data, these platforms to any fintech who decides that we want to do fintech business. Put it up as an API. Any entrepreneur integrates through that API and is able to do whatever they want, whether they want to do digital lending or want to process payments and all that. So more and more banks that are becoming that back end that allows fintechs to flourish through a partnership. So they realize that, look, we have to partner with the fintechs. We have to partner with the telcos because everybody's getting into this space. Banks are also launching other arms of operations. For example, in Nigeria, GTB launched Habari, which is an e-commerce platform. Banks are launching fintech companies as part of their operations because they want to also leverage their own data as fintech companies. So you have the holding company that has a bank arm, investment arm, fintech arm, and so forth. So we see that the banking sector is evolving and they're trying to embrace new models that fits into the digital space.
Okay, thank you. Godfred, I can see your hand is still up. Hello, Godfred. Okay, please, any other question? I see a hand up. Godfred. Hello, Godfred. Okay. Please, if there's any other question, you can put it in the chat.
Godfred is having a question in the chat box.
Okay, I think his question has been answered.
Yeah, he had a second
let me see.
question. He had a second question.
Okay, so the question is, how can banks work to effectively join these new groups for change? I think it's been answered.
Yeah.
Kenneth.
Yeah, that was the last question I answered. That was just the last
Yeah.
question.
Any more questions, please? Okay, Austin, we also saw your hand up. Okay, Kate. Kate Thompson, please, let's hear you.
Thank you. Thank you very much. I still am not so clear around the definition for payment and transfers. Could we not say that transfers is a subset of payments? Because in his definition, he's saying that for transfers is simply moving money from moving money from one place to the other using a platform. And the question is payment not the same thing? So if you are paying a merchant, aren't you moving money from one place to the other using a certain platform, which could be a POS or it could be any other platform? I'm still not clear on the difference.
Okay, Kate. Yeah. I mean, if you want to go to the academics of it, you could be right. But I'm explaining to you in practical use cases, you're making a payment for a service. Your money is going to a merchant. You're making it in exchange for something. Yes, I mean, it's here and there. I'm sure there's an academic definition.
Definition for it. Okay.
Yeah, but
okay.
I didn't really give the academic definition.
Okay. Thank you.
Yes.
Any other questions, please? We still have some few minutes, so if there's any other question, kindly, you can put it on the chat box or you raise your hand, we'll ask you, so that we can now have the closing remark from Precious. Any other question, please?
Actually have a question, a bit sensitive for me. I would want to know, Kenneth, what do you think the new bill, the e-levy bill, what do you think the impact of this bill passage could have on the fintech space as well as payments? What would be the impact on the outlook of this new structure that you've shared with us? Thank you.
Okay, I think that generally, of course, nobody knows exactly what happens eventually, but I think that people will get used to it. Maybe there'll be further agitation to reduce the bill. Maybe a new government will come and make some changes to win the heart of the people. We don't know, but the truth is digital has come to stay. And generally, people will ask themselves, which one do I want to spend money on? The transport or the fuel that I need to buy to go and make my payment in Sunyani, or the 2.5% that I need to do the transfer. So I think that people eventually over time will get used to it, or there will be changes with the new government. But as for digital, it's going forward.
Kenneth, I see William agreeing to what you are saying. I beg to differ. I believe some of these policies can fail. I think that the 1.5% is really high, and it can affect our digital transformation as a country. I don't know, unless, like you're saying, unless there are some changes or there's a cap, like how the telcos have a cap on some transactions, then people can adjust to it. But look at a figure like 100,000, 200,000, and you're paying a 1.5%. I don't know how this can work. And I think there's a research on Uganda that it really affected their mobile money transactions. Yeah.
And now you mentioned research, there is also a paper that was really released by Justice Jokoto, and he actually studied the subject before the bill was passed into law. It's a good read. It's on academia, and he really delved into it, and he has that opinion too, that it's not necessary, and it can be a backlash. But generally, I'm just saying that I think digital will still move forward to an extent, but obviously there are debates here on both sides.
Okay, thank you. Any more ideas about the e-levy, because it's the new baby in our digital world now?
Kenneth, before we move into the e-levy conversation again, I would want to find out, do you think with the speed that fintechs are booming or becoming better day and day, and the introduction of CBDCs in some part of, the growing conversations around CBDCs, do you think the banks could fold up? Your personal opinion is fine, or academic opinion is fine. Thank you.
I don't think, you see, the established institutions like banks are difficult. It's like a ship. It's difficult to move. Definitely the banks will change. They'll evolve. Maybe some people lose their jobs, some branches close. But I think banks will rather evolve into something new. And I think the CBDCs are a knee-jerk reaction to the regular organic cryptocurrencies. And you see how the cryptocurrencies grew dramatically. The adoption of CBDCs, I don't see it like that as well. So I don't think the banks will fold up as such. It will be a long while before we see dramatic changes such as those. That's what I think. And you see, this is a matter of human behavior too. Talking about adoption. Look at even mobile money as we speak of it. I showed you the map of Ghana, and that's similar to across Africa. Adoption is still an issue because there are many dependencies, whether it's data or education and so forth. So these things evolve with time, and central bank digital currencies, CBDC, yeah. Okay, so that's basically, and that's my thought on that.
And someone
Any
is
more
asking
questions, please?
CBC. I think someone is asking what is
Yes.
CBC.
I mentioned it, yeah, central bank
Okay.
digital currencies, yes.
Okay, thank you. Thank you.
Any more questions, contributions, clarification, please? We have about 9 more minutes to go.
Hello. Hello.
Yeah, Patrick, go ahead.
Yeah, there were some contributions during the day on the Financial Inclusion Forum, and then this forum about what we really need to do as practitioners in the digital finance space. Now, this is one of the things that probably we should continue to do, but there's another one that probably we need to do. That is, we organize a forum, not on what do you call it, on internet, but probably face-to-face, where we invite all the stakeholders, including the government, and then all the problems that we anticipate if this bill comes into space. Then maybe we outline them, and then we watch and monitor and see what will happen. Then probably after 6 months or 1 year, we'll come back again, and then we'll see what progress we've made, what are the problems that we have encountered, how are we going to maybe overcome these problems. Then we are then bringing our skills and then knowledge to affect what we can do in Ghana. But if we continue saying hey and hey on the platform, and then we don't actualize what we are saying over there, we are not going to go anywhere. So let's organize ourselves. Probably if the bill comes into effect in May, then probably in January or February next year, let's see what we can do as practitioners, and then we help ourselves, and then we help Mother Ghana. Thank you.
Thank you, Patrick. Any more contribution, please?
Benjamin is saying something in the chat box that he anticipates high demand for cash and use of checks with this e-levy. And I think I agree with him.
You're welcome. Okay. We still have about 8 more minutes. So if there are more contributions, you can bring it up. You can still also put it in the chat.
I see Herbert raise his hand.
Okay.
Hello.
Yeah, Herbert, please, you can go ahead.
Okay, all right. Well, my question has to do with regarding international trade. You know, for the well-established banks or the banks that have been around for some time, they have mastered trade transactions, cross-border transactions. I'm talking about high volume transactions in the millions of dollars and all that, say importation of crude and heavy equipment and all that. I don't see any of the fintechs moving into that space, as in maybe establishing LCs and things like that. So I don't know what your take is on that. Why are the fintechs not venturing into those areas, but rather focusing more on person-to-person transactions, and I'll say the smaller volume transactions?
I can think of three reasons. The first one is risk. Fintechs are typically smaller, so they are focused on consumer or retail, the retail financial sector. Now, so they may not have the backing to handle a case where something goes wrong and they have to resort to some kind of insurance or something. Now, the second thing is that I mentioned, yeah, Ripple. They have to withstand that kind of risk. They have to partner with the big banks. There's a company called Ripple, and they use the blockchain to actually do remittances and cross-border transactions. And the third is still related to the fact that fintechs are more retail-oriented, because what are they doing? They're providing you internet, they're providing you mobile to do your transactions. Most of the users of these platforms are individuals and not organizations. Most of the people that do heavy transactions are corporates, and these corporates, they also want to be safe with their money. They want to go through a lot of long processes to make sure they're paying the right person and on all that. They want to sign documents and contracts and use checks. So it's rare, especially except maybe in the case of paying salaries, pushing salaries to people or something like that, to see a big organization that just wants to be able to, on my phone, send large amounts of money. You remember that in such transactions, you probably need multiple signatories. So there are those nuances around it. Fintechs are oriented around retail transactions and not commercial or corporate. That's what I think.
Just a little contribution from my side. As a practitioner, and especially citing the oil and the international trade space, you also need huge capital here and there. And then, you know, when it comes to banks, they are highly regulated. And so the regulation, I mean, it's also an area that I think it will take a while before the fintech will be able to venture into that high ticket deals. It will take some time, and that's the reason why any bank that wants to remain relevant, they are all trying to partner with a fintech. They can't do it alone. They refuse to evolve digitally, and you are just signing your debt warrant. So almost all the banks. Let's think about the bank that all of us were aware. I mean, we are aware that they were not, when it comes to fintech, they were not interested. Digitization, they were not interested. Go to GCB now, and they are doing excellently well. And they are all partnering with the fintech to ensure that at least they also continue to be relevant in the space that we find ourselves. So the banks will be there, will do the big ticket deals, and then we'll find, partner the fintech to also serve the individual in the market.
Thank you, Mr. Donanan. I think our time is up. But there's 2 questions on the chat box. Let me read it quickly and then take some response from Kenneth. Then Precious will give us the last word. Then we'll bring it to a close. Okay, so the question is coming from Kwesi Atobra. He said he thinks Vodafone Cash might end up being the biggest beneficiary of e-levy, given their 0 fees on transfers. Total thanks will be lower than the other mobile money provided. But don't.
The market got a number of them there. So, and there are also vulnerable APIs.
Hello.
Okay, I can hear you. Okay, maybe hello. Hello, we can hear you.
Yeah. Okay, so Kenneth, you can, if you have any idea, you can. But don't forget that Vodafone is also renewing their charges effective tomorrow. So let's see what comes up. Then we can know whether truly they will be the biggest in terms of the charges.
I mean, that's a possibility, but I cannot fully predict that will happen that way, because we need to also ask ourselves the responsible factors that makes MTN the most popular mobile money platform. So there are factors that could play around that, but others can contribute on that as well.
Okay, there's another one that said, is the Fintech considering cryptocurrency in the near future, where blockchains can be much effective for cross-border payment?
I mentioned Ripple earlier. Ripple is a blockchain-based remittance organization, and Ripple shook the world so much that Swift came up with the GPI in order to make transactions faster. So there are people already going into that space. I know Borderless Pay is a Nigerian fintech that basically does remittances as well in both the fiat and crypto. There's another one that I think BitFX that enables you exchange cryptocurrency with regular fiat. So generally, there are people going into that blockchain space, and there are those who advocate blockchain because definitely is a truth-based system, if you wish, completely traceable, almost unbreakable in terms of security. So it's the possible future, and likely banks are going to again partner with fintechs to make that happen. The Ripple is aggressively trying to partner with fintechs and governments to make that kind of thing happen. Yeah.
Thank you. Stephanie also says regulators have a nice way of keeping fintechs in their space. Banks will continue to play their role in partnership with fintech. Let's see how it goes. I think our time is now, it's fast spent. So if pressure is there, kindly give us your last word. Then we'll bring it to a close. Thank you so much, Kenneth, for the wonderful delivery. We are very, very grateful. Precious.
Thank you very much, Fred. Thank you. So on behalf of Digital Finance Practitioners Ghana, Fred, we'd like to say a very big thank you. Tonight, you've shared so much with us. The major insight I actually picked from where I sat was the fact that Ghana has an open run, and as such is ready for expedited development and integration, as well as collaboration from both the fintechs and the banking institutions, while the telcos are becoming the backbone of this transformation. I also enjoy the fact that you're able to share some expertise, knowledge in various areas that were not part of tonight's outlook of digital financial services with regards to e-levy, CBDCs, digital transformation, even in the banking sector as well. We are very grateful. To our host for the night, Barbara Mintamafo, who is the treasurer for Digital Finance Practitioners, thanks for hosting us. And to Fred Akwesi Enchi Buedu, thanks for moderating the session for us. To every one of you who is on this call tonight, we want to appreciate your presence and also encourage you to participate in the discussion that takes place on our various WhatsApp platforms as practitioners. And do all to get yourself available and register for the next session that comes up in this coming quarter. Until then, thank you very much. Have a wonderful evening and happy new month in advance to all of you.
Thank you.
Thank you,
Thank you all
Precious.
for joining. Yeah.
Thank you.
So much.
Thank you.
We'll continue
you.
the discussion. Thank you.
Bye-bye.
Okay, thank you. Add us to the WhatsApp platform. Thank you.
Okay. Send me your names, please.